Hello and welcome everyone to the Capital Mind podcast. If you'd like to know more about us, visit capitalmind.in, and if you'd like to invest with us, do visit capitalmindwealth.com.
This podcast is for informational purposes only and should not be relied upon as the basis for investment decisions. Clients of Capital Mind may maintain positions in the securities discussed in this podcast.
Hi and welcome to the Capital Mind podcast. This is Deepak Shenoy and I have a very interesting guest with me today, which is Nitin Kamath from Zerodha. Just as an introduction, Nitin is the founder and co-founder at Zerodha. He started it in 2000, more than 10 years ago actually, and I've known him from before that because I was his customer when he was running sub-brokerage of Reliance Money Securities, and now they have become maybe 100 times that size as Zerodha, the largest broker in India in terms of number of clients and perhaps in terms of number of transactions and perhaps securities as well. So I firstly welcome to the show, Nitin.
Hey, thanks Deepak for having me on it.
So Nitin, here's a big thing that I think everybody's talking about. The Karvy issue has been on us. We are seeing that what happened in Karvy is because of SEBI regulation that has said that we cannot have brokers lend money to clients or pledge client securities, and they have done so and taken money into their own accounts, into a company called Karvy Realty. So they've actually taken client securities, pledged them to an NBFC, and eventually they have borrowed money against them for themselves. This is a problem because now people are saying there's a power of attorney that allows them to do that. They misuse the pool account. So let's go through a few of these questions with respect to perhaps how Zerodha is very different or in terms of operations, and how to allay people's fears about the whole broking industry process as well. So first question would be this pool account concept. People are saying, if you keep stocks in pool, something will happen and you don't transfer them to demat accounts. That's what brokers have done. How has Zerodha operated differently with the concept of pool accounts?
Right. Okay. So firstly, an angle that the press hasn't covered in all this Karvy issue is, I think a lot of clients were in on it, right? In the sense, this model has been running for a while, which is not a right kind of a model, but brokers have been promising returns on clients' idle securities, and clients have willingly pledged it, right? Because think of it, right? As in, if I'm a HNI with 50 crores of securities, if it moves away from my demat, will I keep quiet, right? I mean, I get it, if it's retail investor who's got 10,000 rupees of securities, but HNIs with 50 crores wouldn't keep quiet because he's a HNI because he's smart, right? So I think a lot of these issues that are coming blaming Karvy, I think some of it is also because clients were in on it, right? Even the issue with, I think, Allied or BMA, etc. These are all essentially almost like wealth management on client securities that broker promised, and then market, it went wrong, and that's a risk the client took, So I think with Karvy, I think we still have to see what exactly happened. But whatever that's been said till now, it also looks like they have misused it as well, right? As in, I'm sure there are cases where clients were in on it, but it also looks like they've also done it without clients being in on it. And I think clients being not in on it is a real fraud, right? If a client was in on it, it's a fraud, but it's to the extent of circumventing SEBI regulation, right? But if client was not in on it, then it's a real financial fraud, right? Now, so see, there are two ways to run this business, right? One way is where you hold back client securities when client buys it. Right. So the reason brokers do it is because traditionally brokers have done it is because they allow clients to buy securities without caring for how much money is there in their account. Right. I mean, if you actually go back to some of these traditional brokers who are still very offline, in a lot of these cases, money is not even in the broking account, right? As in, they will allow you to buy securities and then say transfer money to me the next day or day after, right? Only once the money comes in, they give the securities to the client demat account. Right? That's a business model from the last 40 years, actually. So a lot of traditional guys have always done this, which is allow client to buy securities, let it come to the pool account, and then you get a time period to pay the money as a client. I mean, the broker has to pay the money the next day to the exchange, but broker in turn would give client between 2 to 5 days to pay the money, and for this facility he would charge a higher brokerage, right? As in, like when my dad, I used to manage my dad's account in the early 90s. He used to pay 2.5% brokerage, right? And he used to pay it because the broker would allow him to buy securities with no money in the account and pay any time in the next 30 days, right? So there was a risk he was taking, so he was charging a higher commission on it, right? Now guys like Karvy and a lot of other traditional brokers who've been around for the last 15-20 years, I think they have legacy issues, right? So operationally they have been in time, so they have client bases where where I'm guessing people still transfer money after buying securities, and I'm sure their processes are all are made for those clients, right? So which means securities come to pool, they wait for money to come in, and then they transfer. Like with someone like us, we don't allow anyone to buy any security if there's no money in the trading account, right? So we know that upfront, that unless there is 100% of the money in the account, we will not allow you to buy, right? So that way we are not really taking any risk on the trade. And a lot of people ask me, why do you charge zero brokerage for equity delivery? The reason for it is because there is no risk on this trade, right? I mean, when a client executes intraday trade or client executes futures and option trades, these are leverage trades, and as a broker we are continuously taking some kind of a risk. It's almost like running an insurance business. Every once in a while someone's gonna default, so you have to be making some money to cover for that, right? So it would never happen with us because we do direct payout to the customer's account. So when it comes to, so if today you are my customer, you buy 100 rupees of shares, as soon as we get it from the exchange, it instantly gets transferred to the client demat account, right? So we've been even asking exchanges if we can do something like a direct payout to the customer's demat, right? Why even run it through the pool? So the BSE Star MF platform or the NSE MFSS platform, which are mutual fund platforms, they both have this concept of direct payout. So we can tell the exchange platform when we buy mutual funds, saying that pay these securities directly to the client demat, so it never comes through the pool account at all, right? So that risk is not there. So I'm guessing maybe that could also potentially be done in one of these. I think there is going to be a lot of regulatory upheaval in the next few months, and I'm guessing this facility will also come through where there's a direct payout. So that way that risk itself goes away. Now, once the security is in the client demat account, right? If it is moved out without client's consent, it's a financial fraud. And the only way to avoid that financial fraud is by tracking your account, right? Just make sure your right mobile number, email is updated, because every time there's a transaction, SEBI is gonna send the depositories are going to send a notification, so you should be aware. It's almost like what if someone forges your check, right? I mean you can't stop that from happening. What if someone gets access to your banking account online? He gets access to your details and he's transferring money out, right? I mean, the only way to avoid that is by tracking your account actively. There is all these phishing credit card scams, etc., right? Where people use your credit cards, are doing transactions without even knowing about it. You can only spot it if you're tracking, So I don't think, in today's world, retail investor can get away saying, I'm not going to track, but I want security forever. We're in a tech-enabled world, and I mean, even if it is non-tech, there are financial frauds that can happen in multiple ways.
True. In fact, there isn't currently an easy way to do so, but you can now also monitor every single contract note, check it against the exchange. You can monitor your holdings with CDSL or NSDL on their own website. Right. You'll get a cash statement from them once a month. So obviously there has to be some work, but for people who are busy, they sometimes think about this as a pain, but eventually if the necessity is this, then perhaps there will be a more automated way to say verify my account, and it comes out and throws in a verification process as well. So on that note, there's the whole circular angle which has just come from SEBI, so which is that you have to remove the concept of a single pool and say whatever was not paid for, you have to move them to unpaid securities account. Whatever you are using for clients to give as margin, that has to go into a separate account called a client margin account. Now, obviously, some of these rules have undone Karvy because they've probably said, oh, we can't do this anymore. So now what do we do? How does this change? How has the circular changed life for, say, a person like Karvy and a person like you, where you don't seem to be affected, whereas Karvy has, had this major problem?
Yeah. No, I mean, see, the thing is, firstly, we have no legacy issues, right? As in, yeah. So, so we have never done margin funding. So we have never ever had to keep client securities with us. So that way, we are actually geared towards benefiting out of all new regulations. So every, right from, when we started Zerodha in 2010, the reason we started was because SEBI introduced a circular on short margins for futures and options positions. Because until then, a broker could allow a client to buy a futures and option position with whatever money, right? So he could take unlimited amounts of risk. And it was not a level playing field because, a broker who offered, allowing you to buy Nifty future at lesser would get more business, right? And so in 2010, in 2009, actually, SEBI came in and said, every broker has to collect this much minimum margin. And if he doesn't collect, there'll be a penalty on it, right? So that regulation is what actually the reason why we even started the business, right? Because when we started the business, it was all wired towards futures and options traders. And we knew that now that margin-wise, leverage-wise, there is a level playing field. Maybe the risk reduces, so you can compete in terms of pricing. So right from then, every single new regulation that SEBI has come through has actually benefited us significantly, right? And so even this, what came through, has benefited us because our competition was using these routes to offer unique products which we couldn't offer because we always felt it's not the right way to do it, right? Because taking client securities and pledging out, at least for margin funding, I get it, because, and it's a very common thing, like internationally as well. If a client has bought securities which he has not paid for, a broker can actually use it as a pledge, raise money on it to make up for the rest. So for example, if I have 1 lakh rupees in my account and I bought say 5 lakh rupees of stocks, now the broker can't credit all the 5 lakh rupees of stocks to the customer because the customer can move it out any point of time, right? So he has to keep it in a unpaid, in your pool account saying, you as a client, only if you pay me the rest 4 lakhs will I transfer you the entire securities, right? So in the US, for example, there is no concept of moving out securities without the broker in sync. In India, you can actually walk into a depository and say, I want to move my securities out, right? And depositories will probably heed to the instruction. Like, what you just saw, how NSDL just moved all the pledge out, right? As in, so there's a risk. So broker is forced to keep the shares in the pool. Now, can he pledge it and not cover for the 4 lakhs? I don't know. I think it's harsh on the broking business because all the traditional brokers who have run business like this, the clean ones, who used it only to fund customer. I think there's going to be a huge disruption in this business. I think a lot of small to mid-sized brokers who don't have the balance sheet today to be able to lend that margin funding money from their own books will have to kind of fold up or merge or become a bigger balance sheet by. And in India, the problem is merging broking businesses are not very easy, right? Because when you merge, the new entity has to do KYC once again, so which kind of defeats the whole purpose of merging. So that's the reason you have never seen a merger in India on brokers as well. So it doesn't affect us, as I said, because we have never done it, right? So now when we start doing it, we intend to do margin funding because it's been a demand from our customers for a while. The reason we hadn't done it, actually, it's kind of, we had so many other projects, so we were fortunate that we didn't have to do it. But even if we had done it, right, we would have done it, maybe use a client securities and given money to the client. It would never have happened that we have taken that money for some other purpose, stuff like that, right? So that way, we've been fortunate that we never did this in the previous avatar, so we don't have that legacy issue. So when we start tomorrow, thankfully for us, the last 8-9 years of the business has been good. So we are sitting on massive amounts of our own capital to kind of lend. So and even if we haven't taken any external investors yet, but if there's an opportunity, to get some equity, and if there's a 15-16 spread on the money, it makes sense to maybe tomorrow raise some money as well. So we need to see, if this margin funding when we launch really kicks off or not, and then we will see how we make good of that margin funding amount that we'll have to put on the table. So.
That's quite interesting. In fact, Nitin, I think I would certainly be looking for a Zerodha IPO, and if you're looking at banks trading at 4x book on a tiny level of book, I'm sure Zerodha will get a valuation that is far significant. So on that front, I hope we have another podcast about that at the time in the future. But okay, here's the interesting thing: margin funding, the way you have talked about, was most like a security is pledged and money is given to to fund the customer's activity in a way. But in some ways, Zerodha is already doing it, in the sense you can go to your console and say, I want to put this for margin. So how is that different from, let's say, what this margin funding operation?
Okay, so today it's not really margin funding, right? What we are offering today is margin against collateral, right? And so the way it works is, today when you come to our end and pledge securities for margin against, for trading F&O, that gets pledged with NSECL. So we are just like a conduit. So the clearing corporation is where we pledge the securities, and they release a margin accordingly to that person. So it isn't
Cash.
It isn't cash. So that's the reason we don't allow people to buy securities with that, because it's just margin. It isn't, and that margin can be used only for F&O trading
Or intraday, I guess.
I mean, we can, I mean, today you can, but technically we shouldn't be allowing that as well. Because what happens is, today when someone's intraday trading with that funds which we offer, they're essentially blocking our funds, as in the broker's funds, right? So we allow it because it's a really small, tiny book for us. So we haven't really ever advertised this F&O pledging and etc. much. It's not a big book for us in any case. In any case, it's not even our book. The book is actually lying with NSECL. The difference between this and what the issue right now is that here the securities are lying as yours with NSECL, the clearing corporation. In whatever the issue is with Karvy is that it's not your securities. It's almost like Karvy's securities, which is being, I don't know where it is being pledged. So
Yeah, in fact, even the financiers, I guess, are very confused right now, because they're like, oh, wait, you told us it was your securities, and now you're telling us that it's not your securities. And wait, I gave all these pledges, and, so I believe in a new margin funding world, if it had to happen now with the new regulations in place, what would be different?
So what SEBI has said now is that all securities which are unpaid for, right, has to be in a specific pool account, and that is ring fenced, right? That means you cannot take that security and pledge to anyone's, right? So it either has to go back to the customer, or you sell it, and if a customer doesn't pay, eventually you'll have to sell that security. So you sell it, and you give the credit of whatever is the difference back to the customer, right? So they're ring fencing that, and so that way, I think the new regulations are brilliant. I think this whole issue cropped up maybe because of the new regulation.
It is. In fact, what they actually told you was you have to close down your current pool account and open a new one. So effectively, if there were any shady activities being done in the old pool account, it would automatically phase away, because you couldn't do it with the new pool account. So in a way, that was brilliant. By saying
no, I think like a lot of before we started Zerodha, right? As in, a lot of people kept talking about how SEBI is this monster who's waiting to eat you up if you start a business, and I mean, and it's just been the opposite actually. I think like it's just as long as you're keeping your customers' interest in mind. I mean, SEBI has been open, and they've been trying to kind of democratize this ecosystem so much, right? As in, and So I think this new regulation will ensure a lot of issues. I mean, a lot of legacy issues that have been running for the last 20, 25, 30 years will all get fixed. Now, is it good for the broking industry? You know, it's tough to say.
Tough to say.
You
Yeah,
know,
I mean, you take out one source of income at a time, right? So you take
Yeah.
out the margin funding role, but in reality, a lot of business continues to be there, and you may not have the kind of like in India, you don't have yet order flow based payments,
Right.
but that has already BSE has already started to pay for order flow at some level, so maybe that is another flow.
No, I mean, no, I think that order flow, SEBI again has a regulation. So, whatever liquidity enhancement schemes an exchange can run, they give you only when you launch a new contract, and only they give it for a specific time period. Say that you can use this, liquidity enhancement scheme until you get some liquidity. So 3 to 6 months. So no, I mean, SEBI is just, it's like almost, it's like, you're being in a school, so they're, no, but I guess, the issue, I guess, in India also is that, rules are made for bad actors, right? And it kind of affects a lot of good actors,
Yes,
right?
it assumes everybody is bad, and
Right.
then
And I think the reason for that again is in India, this whole it's easy to get away with financial frauds. As in, I mean, even if it's not easy to get away, I say the punishments aren't severe enough, right? I mean, like in the US, if a broker does something, I mean, he'll have a $10 million, $20 million. I mean, there are fines of $100 million, right? I mean, here, it isn't like that, right? As in,
they'll say pay 5 lakhs and get on with it.
I mean, go to the court, and then once you go to the court, it can take forever. So people end up, maybe I think stricter regulations there will kind of help, to solve for the bad actors. So, see, on the pricing side, product side, brokers like us have made it almost really, really tough for traditional players to play it out. So the only leverage they had was around this, which is
Margin,
to offer higher leverages, to offer, use all of this higher margin funding and etc. So now if that goes away, then it's really tough to see how this ecosystem with this 500, 600 mid to small size retail brokers can exist for more than the next few years. So.
Agreed. I think it's going to be very challenging to see. Just to turn track onto another thing that people have said is a problem, Nitin, and it's the power of attorney. So people have said, if I give a power of attorney, the broker can do so many things. Can people operate without a power of attorney in the new world, in where tech is happening? Does Zerodha allow something like that to happen?
I mean, so we've been pushing for this, right? We've been saying, why do we need a power of attorney, right? I mean, see, today the power of attorney is required because when a client sells securities, I mean, how does a broker debit the security from the demat account and give it to the exchanges, right? I mean, today there is no way to do it, right? Now, but then if there is an exchange transaction, brokers should have the ability to debit securities and credit to the exchanges, right? I mean, why do you need a POA for that? Because there is a proof that the client has executed this order on his own on a trading platform, so that should be proof enough to give us this access to debit the account. I think SEBI has put some things in motion which can make it happen. Okay, the first thing they just put out a circular is that all depository accounts will now be tagged with their unique client codes of the trading account.
Yes.
That means now there is a mapping, because until now there was no mapping between your trading account and your demat account, right? So like depositories work in their own shell, and like in a silo, and trading exchanges worked in their own silo, right? So there was no mapping between these two accounts. So, but now that there is, so the next step, I think logically is to say is that for any depository transaction, is there a stock market transaction, on a stock exchange transaction as well? Now, here's the interesting thing: all the new accounts that we are opening, we have an approval to open it without the POA.
Wow.
So currently, we are running a beta of this new method, which is where client gives us an online consent to debit shares whenever there is a trade on the exchange in his kite trading platform. So the current, or the last 1 week, we are in that beta actually. So hopefully if this works and we can prove it to regulators saying this is this covers for everything. I think we can potentially have a new world where there's no POA, right? But then here's the thing, right? As in, even if there were no POA, financial frauds can still happen, right? I mean,
you could still say there is a trade and then take the money out.
So I think it's like I said, in today's world, be it a bank, be it credit card, be it insurance policy. I mean, there are frauds happening everywhere. So you have to be just aware. I mean, you cannot just keep quiet and say everything is hunky dory. So
yes, I agree. I mean, I think it's also people like in the system should be aware of, if you're in the system, you need to take care of stuff, because otherwise tomorrow if your bank hits you with a fine that you didn't know and cleans up half your account, you cannot really say, listen, I didn't know this. You have to go to court, but you have to track your account. That's the only way you'll know.
I mean, it's happened to me. Like, I had a charge on my credit card from the bank and I never saw it. Thankfully, I have a chartered accountant who reconciles my account, and he said, dude, there's this big charge. When did this come? I mean, I don't see a corresponding bill, that you given. So that's when I realized that, this charge was put by mistake, and I had to go and ask the bank to reverse it. So it can happen to anyone and everyone, right? As in, so yeah, I think it's just, you cannot, I think I've seen it with our clients as well, is that, you'd be surprised to know that the profit and loss statements, the ledger statements are the least looked at statements.
Absolutely. I know exactly what you mean.
So people don't bother to look at, because we track, right? We track because we are trying to figure out which are the features that we need to work on, right? As in, whatever clients use, we are trying to make it better, right? So on Console, our reporting platform, we are saying, how do we make what all things better? And Console itself is not used as much because the reporting, right? So, and within that, the least used are the ledgers and the P&L statements, which is kind of, which kind of tells people's, mentality, so which is, this whole loss aversion is a thing, and so.
Well, that's actually not just that. I think it's also the numbers. I'll give you an example. I was with another broker before Zerodha, and they said you can pledge your stocks for margin, and I thought it was the same way Zerodha. No, Zerodha doesn't charge me any interest if I put these stocks on margin. So because they're not giving me any cash. But this other broker was actually doing this margin funding thing. So I would pledge it, and then I suddenly started noticing my ledger balance a little bit less than it needs to be. And then I go and check in the ledger, which is a complicated, half the terms I don't understand kind of ledger. And there was an interest cost.
Right.
So when I called up, I found out, I said, I'm charging you 18% interest. I said, yeah, I please, give it back. So this is, if a person like me who's in the market is not doing this, I mean, you can imagine the lay person who's, but you're right, we have to monitor. There's no better way. Perhaps there's going to be a service, and gives me ideas, but let's keep that for another.
Yeah. No, I mean, I think, see, one of the things India has missed out is on a professional advisory ecosystem, right? And I've been peddling this idea for a bit, is that today the problem is advisors have conflicted kind of relationship, because advisors aren't really advisors, they're distributors, right? They're making money from the person who's manufacturing products. So the incentives are kind of misaligned. Right? So we've been peddling how India needs this professional advisory ecosystem who can take care of the customers, right? Who's doing this, like you said, right? Like a service, who's just monitoring. Like, I used to be, for a while, we used to have this authorized person thing with this company called BMA, who just got banned, So I never had a demat account with them. And for like 2 years, they charged me demat AMC charge. They used to charge me DP charges. And like everyone else, I never noticed it, right? So, so as soon as a broker is, I think, even if he's financially strong, I think if you realize a broker is not doing things ethically, I think that should be the first sign to move out, right? Because eventually BMA, again, it took 10 years for them to disappear, but eventually they went bankrupt, etc., right? But, just to look at the ethical aspect, it was evident 12, 13 years before, saying that, they are okay making money in non-ethical ways as well, right? So it's, so I think, if clients should be aware, they look at brokers, they should see if brokers are taking shortcuts, to kind of make money, etc. And if they are, I think it's, your assets are lying with them. So I think it's a good sign to kind of say, dude, let's go find someone else.
The chickens will come home to roost someday. I'm sure. And on that front, I guess people have been now saying, oh, no, let's not go with standalone brokers. You should go to bank brokers. Now, in my experience, that's not true because I've seen the operation of both sides. And I think bank brokers are independent entities from the banks. If they go down, the banks are not going to say, oh, no, this is my bank that is going down, because it's actually not. It's a subsidiary. But from your experience, what is the difference really between a bank broker, and what parts are more risky and what parts are less?
No, I mean, see, I think there is, people trust banks, right? And that's the moat they have, and they've built so many businesses, not just broking but insurance and asset management and etc. using that moat. So, in what way is a bank broker better than an independent broker like us? I mean, of course, the brand value itself, right? As in, people trust them. So, but here's the thing. Okay, now I don't know if you've seen this SEBI circular recently. A couple of big bank brokers, right? Just consented to a penalty, saying that there was this operational, thing that happened, issues that happened, where a bunch of employees did some mistakes, right? So such kind of a risk is almost zero with a broker like us, because, okay, at Zerodha, not a single person in our business has a revenue target, right? Because as soon as you have a revenue target, people missell, right? And misselling is essentially also in a way a financial fraud, right? Where people's, a relationship manager calls up, uses, he takes a person in consent, moves the security as a pledge, and does F&O trading on it and loses. And that is rampant in this country, right? As in, that has been happening, for quite a long time. I hope SEBI does something about that as well, because, it is, because a lot of, these relationship managers, etc., they're always in the pressure of generating revenues. So, they maybe missell the wrong product to the to the customer, and lose money for the customer as well. So it's something like that would never happen with us. I mean, I've not a single time we've ever asked a customer to buy or sell anything. Forget relationship manager calling and selling something, right? I mean, there are no relationship manager in the first place, right? So that is a huge. I mean, that's a thing that's never spoken about, right? As in, how much money is getting lost in that form, and that is probably as big or bigger than whatever other kind of things that have come out, So now, in terms of balance sheet size, I mean, today as Zerodha, I mean, one of the things that we are doing, and after this episode, is because people have asked us, how safe is my money, etc. So we have thought of, putting a snippet of our financials every quarter. So I think in the next few days we should have something saying, this is our, this is how much cash we have, this is how much is the margin funding book. I mean, today it's zero, but tomorrow there is going to be something. So, so people know upfront what is the financials of the business. So, just tell you, so we have like over 500 crores of cash with us, right? So, and sitting idle, right? So that is, and that is almost, like most of the clients' funds, is actually, that's how much skin in the game we have, right? And, so hopefully that'll give confidence, right? Because you go to a bank broker thinking he's got that kind of money, right? So I can't talk about all the brokers, but at least with us today, we can go out and say, dude, we have that kind of money lying, idle. So that's how much skin in the game we have. And here's the thing, right? As in a lot of these bank brokers, these are employees, right? Now, skin in the game for them isn't anything, right? Because it's not really their money, right? In our case, this is hard-earned money, through blood and sweat over the last 10 years, right? And this skin in the game is real skin in the game. This isn't something, this is not even VC money, PE money, right? This is, we've worked maybe 15, 20 hours a day for the last 10, 15 years, so, and that's how it's come through. So I mean, we intend to, I mean, we have never spoken about it, but to give clients confidence, we intend to kind of put these numbers out regularly from now onwards. We used to do prop trading. So what what we've done is we moved that out, right? Saying why even do it in this entity if clients worry about it. So today there is no prop risk as well. So there isn't like we even when we were doing prop trading, it was all delta neutral. So there was. I mean, we can't be in this business of trading if we ourselves don't believe that we can make money trading. I mean, it is right. So I know a bunch of brokers out there say that they don't do prop. I mean, I'm like, how do you sell something if you don't believe that this works? So right. So I mean, I sell Zerodha so actively because I truly believe that my life has changed because of F&O trading, right? And by trading option strategies and etc. Right? I wouldn't offer a product if I thought there is no way to make money. Of course, making money is tough, right? Maybe 1 in 100 make money, right? But 1 in 100 businesses that start make money. So you can't, right? You have to promote. You have to kind of put that one guy who makes money in upfront and say, dude, see, this guy makes money, right? And so we believe that trading the market can make money, and I think we as a platform offer the best chance in this country for traders to come try out and see if they can make money trading F&O. But I think the thing about F&O that is thing about trading actively is that it's a high risk business, and so one of
full-time business, I guess.
yeah, but then as I said,
But I agree with you. I think the points that you mentioned, I hope again, like I said, I'm sounding repetitive, but I hope you have a Zerodha IPO where some of these other fears will also go away. But it's perfectly, at least in my mind, I don't think there's a superiority. In fact, most of the times, just the name of a bank can make you afraid that you'll never get your money back if you're gypped, versus in a standalone broker, they have everything to lose because it's such a different world out there. But I hope all of these things get sorted. I really love this, and I want to end with one thing, which is, I think you're aware of this because you've been on SEBI committees, you have seen how things operate. SEBI is not entirely unaware. They have known something like this has happened for years and years and years, and slowly they introduce this regulation. So, two things: why does SEBI react let it happen for so much time? And secondly, what more can we expect? Is there more, and should we be worried about more regulation that will come in?
Right. No, I see. The thing is, regulators around the world, trust the intermediaries, right? They have to trust. Otherwise, if you don't trust, how do you grow the ecosystem, right? As in SEBI's primary job is also to grow the capital market. I know they have to take care of interests of investors, but their job also involves in growing the ecosystem, right? And I think so they essentially trust intermediaries, saying you would not break rules and etc. Right? So every time a rule gets broken, they end up reacting, right? As in, now if you set all rules and regulations and stifle innovation in all forms, right, then how do you let the ecosystem grow, right? So I don't know if SEBI maybe knew a little bit of it. I don't know they thought the impact would be this big, right? I don't know if it was the case, because if it was, I think they would have done something about it before, right? Because I don't know, it's tough to say, it's very tough. I myself wouldn't have believed that a Karvy. I still can't believe that that's a scene. I think you just have to let this whole play out.
Yes.
Right? Because
it may not be as bad as we think.
Yeah. Because if clients were, like I said earlier, right? If clients were in on it and they willingly pledged securities, wanting a certain rate of return on the securities, and if they are 95% of this, whatever is the size being spoken about, which is going to be the case, because like one rich guy will have 100 crores of securities, right? You could have 1 lakh, 1 lakh rupee customers, who will add up to 100 crores, right? So, so if that one rich guy had given that 100 crores willingly, right? So that would, essentially mean that out of this, whatever we are speaking about, maybe 99% was done willingly. And and maybe just 1 to 2% was done unwillingly, right? So, and that 1 to 2% of retail investors will come on Twitter and talk about it, right? As in,
That's true. That's
that
true.
guy who gave 100 crores, would not come on Twitter and say, I
Well,
willingly.
if you investigate, you find out that he's done it. So,
Yeah. So no, he's not. As in, it's not a financial. As in, he's not he's done a customer if he has given securities willingly to the broker because the broker promised some rate of interest. Customer has not done any financial crime, as in, right? As in, but SEBI, I don't know if you've seen, there was also another circular which SEBI has now blocked any off-market transfers
Yes.
to non-family members, right? So they have plugged that loophole also, right?
Also, yeah. In fact, our whole as a PMS, our operation had to change. Of course, microscopically for us because our custodian told us to change it. But a lot of people who were doing this semi-off market, take it, give me back before the end of the quarter kind of thing. That is you're right. I mean, loopholes are getting plugged.
Yeah. So yeah, I mean, it's better late than never, So, but I think it'll be interesting. No, I think whatever the last 3-4 months, the rules and regulations that have come in, I think I hope SEBI gives some breathing space to the industry because if too many rules are brought in, it might just kill most of the industry. I mean, it won't affect us because most of these are benefiting us. But I'm talking as a as an industry, as a part of the being industry, that maybe you should give some breathing space for all these rules and regulations. Brokers to get
Or allow brokers to merge, like you said, without
Right.
having to do KYC again. That's as simple as
Yeah.
it's a benefit to the industry. But
Absolutely. I think a country like India shouldn't maybe have more than 40-50 brokers, So I think, I think today there are like 3,000-4,000, and so it's so I think allowing merge brokers to merge is a good idea, So
I agree. But this is great. Thanks, Nitin. This was a wonderful interview, and I want to ask you if you have any last things to say or a piece of advice to give viewers or listeners to the podcast.
No, I mean I think you covered everything that I had to say. So. Right.
Cool. Okay, this is great. I think Nitin's actually brought about a lot of interesting points. I won't. We'll have a transcript for this as well. We'll put this up on Capital Mind. I hope a lot more of you will have less questions now going forward about the operation of the broking industry in the process, and perhaps in specific Zerodha itself. And let's all hope soon that. Brokers like Zerodha will list, and we will have better opportunities to participate in the broking business that has made so much money for all of us as an industry and the business itself. Thanks a lot, Nitin.
Yeah, thanks, Deepak.
Cheers, and please visit us capitalmind.in. We also have a wealth advisory solution, and I hope the kind of a solution that Nitin is talking about as a professional advisory solution at Capital Mind Wealth. Thanks so much for listening.